In this session, I will guide you step by step through a real example to illustrate the typical inconsistencies found in financial data and to show you how to identify potentially unreliable economic information in companies' financial form based on my experience. So for this training purpose, I use sample economic data, but similar error can also occur in production data. For example, a company may declare that it produced 3 tons of product, but sold only 2 tons without reporting any post-harvest losses. You might raise this inconsistency to the company because something happened in between. It's your role to understand why this data have this kind of inconsistency. In another case, a company may declare a production of 3 tons, for example, but report sales of 10 tons without indicating any purchases or collection from third parties. So, of course, this one should also be raised to the company and just to understand if the data is accurate. But let us now examine together. I put the sample here. Let's examine together this data extracted from a SAS report. In a previous video, I showed you how to download this type of report in PDF format, and I hope that you recognize this item here, this three section here, and this page present the company's performance in relation to the three pillars of sustainability. I mean economic, environmental, and social pillars. And we will focus on the financial data to detect inconsistencies just for this training to let you understand some of the concept. So from my experience, always begin by checking the basic accounting consistency. So first, verify that the balance sheet equation is respected, meaning that total assets must be equal to total liabilities plus equity. In this example, provided assets amount to 252 million, liabilities, as you can see here, liability is up to 207, even a bit more than that, 7 millions here, and equity 44, around 44 million, which is mathematically correct. However, you must then examine also the structure of the balance sheet. Here, current assets should normally be lower than total assets and current liability lower than total liability. Here, both current assets and current liability are equal to their respective totals, which means that the company um, the company has no non-current assets or long-term liabilities. So for a company with a turnover, look at the turnover here. For the company with turnover above 800 million, this is highly unrealistic and constitute a first red flag that you might raise in your mind first before to reach out the company. Next here, I also have an example. Check the net working capital by subtracting current liabilities from current assets. The result is 44 million, of course, around 44, more than 44 million, which is consistent with the declared figure, but exactly equal to equity, an equity that is highly unusual and therefore a second red flag. So this one could be also a red flag for you to raise, and then review the income statement by recalculating net income. It's something that you can also do. In this slide, you can see that yes, net income calculation simplified formula. Uh, as I said, review the income statement by recalculating net income using turnover minus all categories of costs. The calculation is mathematically correct, of course, but the resulting net margin is approximately 69%, which is almost impossible in normal economic condition, and suggested that costs are under-declared, or that revenue and profit have been manipulated. So something that we should take, we should set carefully. You should not tell it to the partner beneficiaries like that, but you should find a way to raise it to them. So it's something that you should catch your attention when you are analyzing a SAS data, company SAS data. You should also verify the coherence of yes, you should also verify. Yes, this is also a good example. You should also verify the coherence of EBITDA, which should equal, which should be equal net income plus taxes, interest, and depreciation. Your the EBIT data that you see here should be the equal of net income plus taxes and interest and depreciation. Since all of three items are declared as zero, EBIT data should be equal to net income. Yet the reported EBIT data is far lower, indicating a major inconsistency, as you can see on my screen. So take time to check this. It's important for us at COLEAD to you to rate this kind of data at first level and discuss with the company to understand if the data is accurate or not. So another strong warning signal is a presence of zero value for the script for depreciation, interest, and taxes in a company of this size, which point either to a misunderstanding of the form or to deliberate misreporting. We can say it like that. And Also, where I want to draw your attention is to why not finally look suspicion duplication, such as total turnover being identical to turnover is something that could happen according to issue raised before, which often result from copy paste and reveals poor understanding of financial indicator. Is why it's important also for some specific part of the SAS to tell to the partner beneficiary to have record on the hand that they can put directly on the platform, or put the right person on the right section to record the good data in the system. So when such issues are detected, you may ask the company to review its figure and provide the financial statement used as a basis. So in summary, always verify the balance sheet equation, the presence of non-current item, the logic of net working capital, any net margin above 30 to 35%, the consistency between EBITDA and net income, zero value that may appear on the key financial item, and any suspicious duplication as a large company with no depreciation, no taxes, and no interest expenses is not economically realistic. But please note that it's important to emphasize that that this process it's important to emphasize that because um, this process is not about judging the company. Yes, this is a real word. This is what I was the word I was looking for. This process is not about judging the company based on the performance, based on its performance. Whenever such inconsistency are identified, the objective is to approach your objective, maybe to approach the company politely and explain that you have observed certain issues and consistencies and would simply like to verify um, whatever the figure are accurate or not. For example, to confirm that no zero is missing, a zero is missing, that the data has been entered in the correct field. Depending of where you are, you should find a polite word and a diplomatical approach to discuss with company around that. So thank you for your attention.